What's going on, everybody? And in this video, we're going to be talking about why right now is the best time to start investing and why right now is making it easier to ever live off of dividend income. And honestly, just why right now is the time to capitalize on this opportunity. We got some math to look at. It's not boring math. It's actually pretty interesting. So if you do like this type of content, you enjoy dividend stocks, dividend investing, all the good stuff, make sure to subscribe to the channel, turn on post notifications so that you don't miss out on any future videos. Leave a comment what you think about this stuff, all that good stuff, and let's go ahead and get straight into it. So as you're looking at right now, you're looking at M1 Finance. This is where my portfolio sits, and it's down 7.5% over the past week. Markets are down, inflation is going insane, interest rates are basically going to rise because they correlate with one another, and there's a lot of stuff going on. The market as a whole, if we go ahead and look at the S&P, we're doing okay today. We're up 0.9%, but the past week we're down 8.48%. And year to date alone, we're down 21.41%. I saw an Instagram post saying that this is the worst year to date we've had since 1940. And that was pretty interesting to me. So keep that in mind. This does provide probably the best buying opportunity year to date since 1940. But let's go ahead and kind of talk about what we're going to be looking at. So what we're going to be doing the math on is this ETF, the Schwab US Dividend Equity ETF, ticker SCHD. The past year, it's down 6%. It pays dividends on a quarterly basis, has a dividend rate, a trailing 12-month dividend rate of $2.26, and a yield of 3.14%. So these are the numbers we're going to be used to make these assumptions. Looking at the stock price before we go into it, we can see at its highest this past year is about $82. And right now, it sits at about 72. So we're going to be looking at the math and these kind of differences on how big and why right now is the perfect time. So let's go ahead and get straight into it. So let's go ahead and do the math on dividend income, starting with ticker SCHD. As we saw, dividend yield of roughly 3.14%. and a dividend rate of over the past year of $2.26. So let's say hypothetically that you were going to invest $100,000, and that's the assumption we're going to make, an investment of $100,000. And you bought the shares, a few months back, December, January, and you paid for an average price of $81. That would lead you with 1,234.57 shares. If you do that times the dividend rate of 226, you'd add up to about $2,270.13 in annual dividend income from ticker SCHD. Now, if you bought it right now, you spent that same $100,000, but you paid for an average price of $72, what you would be getting is 1,388.89 shares, which is it is 150 more shares alone, adding up to $3,138.89 in annual dividend income from SCHD. So that's kind of just a visual on why right now is a perfect time to capitalize. And I can't sit here and say, I know that this is the bottom of the market, but I do know that this is further down than it has been before. And I can't tell you how much further it's going to fall, if it's going to recover right now. Nobody knows, nobody can tell you, but let's go ahead and do even more math. Let's do math on the profit that you would make in this scenario. Your $100,000 investment, $81 per share. You get that same amount of shares. You do that, let's say hypothetically, it took the stock a few months to rise, maybe even a whole year, 2 years, 3 years, whatever it might be, and you sold out at $100 per share. You do that math, you would get $123,457. You made a nice profit of $23,457. Okay. However, what if you did that with that $72 price? Same amount of shares, you do that, you make $133,889. You make a almost $34,000 profit. The difference in between that is $10,432. And that's a massive difference. Okay. That's kind of just the difference on getting good prices and getting expensive prices. One thing that I really have taken away from the Intelligent Investor book, check out the link in the description down below if you want to go buy that on Amazon. Highly recommend it. But the main thing I learned is you have to buy things for their value in the market. For example, I'm going to make this really simple. You want to go out to the store and buy a loaf of bread for $250 whenever you can buy that same loaf of bread for $5, Maybe we'll even say $25 for a simple explanation. You want to go pay $25 for a loaf of bread that's worth $5, okay? So why would you pay $150 for a stock that's worth $100? You have to be buying things at their current and good value. So let's go ahead and talk about the overall differences because you secured the dip hypothetically. So your annual dividend income makes a difference of $348.76. That's $349 every single year that you're getting to potentially reinvest. And then with the gains, as we saw, it's a $10,432 profit difference. So that's almost leading you to over $10,750. And that's just in year one. And then all the annual income that you make more in year two, year three, whatever it might be. And kind of a further note, just to kind of say this, is you could reinvest, and I highly recommend, I'm not a financial advisor, but just my personal opinion, that you reinvest all the extra dividend income and the profit difference, say hypothetically, while you're holding on to the investment, you are reinvesting those dividends and growing the portfolio even bigger. So potentially your number, your 133,000, would grow at a faster and bigger rate than the $123,000. And because you're getting more money to invest and things like that, you're getting more shares, you're getting more dividend income. So keep that in mind. But all these different things put aside, once you sell the stock, once you sell your investment, you're going to have a bigger profit. And that just kind of leads over to a domino effect. And what I mean by saying this leads to a domino effect is you have this extra profit because you bought it at a better price, you got better margins on your investment, better returns, and so now you have more money to invest in another investment. And it just leads to further future gains. And this just is a cycle that if you can consistently do this, it adds up and adds up and adds up. As you can see, here's my position in SCHD right now. I own 2.46 shares. Nothing like the initial investment kind of hypothesis that we did. But what I'm saying is it's all about starting. And, check out M1 Finance if you haven't already. It's really easy to use. Using the link in the description or the pinned comment down below, you can get some free money. Go check it out while you can. Get a head start on investing, just like you can get a head start right now. It's like two birds, one stone, getting free money from M1 Finance and two, securing the dip hypothetically. But the stock is falling and I'm continuing to buy. I do believe this is good value in the market. I do believe in the economy as a future as a whole, but that is going to wrap it up for this video. So if you did enjoy it, make sure that you subscribe to the channel, you turn on post notifications so that you don't miss out on any future videos and all that good stuff. Thank you for making it to the end. Leave a comment below, all that good stuff, and I will see you at the next video.